So, security analysis is our second meeting, and today we'll be having financial market and trading. The last time, I think we did overview of security analysis, and we understood what security analysis is. We understood types of security analysis we have. We also learned securities, that's types of securities, and we understood how real asset is different from securities. So that was just an introduction for us to get what security analysis is. And like I said, if you look at the name of the course, we are reading security analysis. We all know securities is financial asset that are traded on the financial market, and analysis is assessing something. So, in other words, we are talking about assessing securities. And today we will delve into financial market and trading. And we know securities are traded on the financial market. Okay, so let's move on. At the end of the lesson, you should understand financial market. You should be able to explain trading works, identify and apply common order types, understand key market concepts, explain the role and structure of the Ghana Stock Exchange. So, overview of financial market. So, when you talk of financial market, we are basically talking about a platform where financial assets are traded. Financial assets, also known as securities, are traded. So, it facilitates capital allocation, it enables price discovery, and it supports risk transfer. So, you're able to become a shareholder, or firms are able to gain capital through this platform by um, trading their shares. Enabled price discovery means that these people, the financial market, they are able to they determine the price of the firm based on supply and demand. Then it supports risk transfer. Okay, so why is this thing? Okay, now let's look at classification of financial market. Financial market can be classified into money and capital market. So you see, I'm saying money market versus capital market. Now, money market is used to for trading short-term assets. Then let me see whether I have them on. Okay, if I have them on, then let me just mention them. So, money market versus capital market, primary market versus secondary market. Okay, we have OTC and over the counter versus physical exchange. Now, money market is for a short-term securities, and like you can see that the sign of less than 1 year there. So normally it's not more than 1 year. Then return it as short security. So it's used for trading these types of securities. So we have treasury bill, we have commercial papers, and normally we see it as low risk and highly liquidified. Why? When we say liquidity, it's the ability of a person to convert its security to cash. Okay, and it's very easy. Treasury bill, we have 3 months. So you can imagine you can convert your investment to cash easily compared to capital market. Now, capital market is for long-term securities, and it's normally more than 1 year. So investing in shares and bond is normally long term. So that's it, and it's high risk. Now, one of the risks associated with shares is the price that fluctuation. Okay, you don't know what will happen to the share price. It's serious. You don't know what will happen. Today is going up, tomorrow is going down. Okay, so that is then the return is very high. The shares can within a day or a week or a month just triple your income. Okay, so those who have like 10, you can invest like 10,000 Ghana cedi in shares, and maybe by 6 months, by year, and you have tripled or quadrupled your income. So it's one investment that gives high returns, and we know that when we say something is giving high return, definitely then there is high risk also associated with it. Then we talk of bond. Bond is investing in what debt instrument, that is investing in long-term debt. And when we talk about long-term debt, um, this is where people give up their money um, on credit. or lend their money to the firm, and with a specified period where the firm would have to be paying a fixed income over a period, okay, a fixed amount over a period. Then when it's matured, the money is paid. Then we have, I'll talk about primary market versus secondary market. Now, primary market is for trading new shares, okay? New share example is initial public offering. That's where a firm and decide to issue new shares, okay? And with this one, it's you are buying directly from the firm. So most always, I think Car Bank did some not long ago. They came into trade in new shares. This is what we call what public offering, okay? Initial public offering. So the initial shares that the firm will introduce. So that is what we are giving as an example here. Funds go directly to the issuing company, okay? This one. Then after the firm directly issuing the shares, and you invested directly buying from the firm, if after that you want to buy or sell, you need to do it at the secondary market, because now it has become existing security or existing shares, okay? So existing securities is traded, invested trade among themselves. They trade among on the secondary market. So this is why someone will buy from the firm directly. Then if the person want to sell, okay, the person would have to do it at the secondary market, because it's an existing shares. So they will trade at the secondary market, and it provides liquidity, okay, because when you invest in the shares and you need your money, you can go to the secondary market, trade it, and you get your cash back. We have over the counter, and I said over the counter versus physical location. Okay. Over the counter is decentralized electronic trading. Now, what is happening here is that this is where trading is done over the internet, over the phone, normally between less smaller firms that are not matured enough or big enough to qualify to be listed on the main exchange of a country. They trade among themselves. It's less regulated and it's dealer based. Okay, you normally deal directly with the firm. Okay, with the firm, and so that is over the counter. Then we have physical location exchange. Example is Ghana Stock Exchange. That one is centralized. Everything is done at the Ghana Stock Exchange. It's a very regulated market, very transparent pricing, because pricing is quoted. You know, when price of a share change, I go to the Ghana Stock Exchange platform or other platform, you will know. Then organized trading system. Okay, so this is where um, um, listed firms, matured firm, listed firms trade their shares, okay, and very much regulated, less risky. Now, after talking about the financial market, we have to go to trading mechanism. See, when I was teaching when I was explaining financial, we said this where shares are traded, this where securities are traded. What is trading is the trading is exchange, right? Exchange of goods and definitely um cash. Okay, so when there's exchange of goods and cash, or sometimes even goods and goods, then we are saying there's what trade. So there where shares, it is a mechanism, or is a mechanism through which securities are exchanged or traded. It's a mechanism through which securities are exchanged. That is a mechanism through which people buy and sell securities. Okay. Now the ones we have two main types. We have the auction market and the dealer market. When we come to the auction market, this one is normally done at the organized stock exchange, and like Ghana Stock Exchange. This is where people bid, right? Investors bid the price they want to acquire the shares and the securities, and the price they are willing to sell the security. So this is, there's a bid and ask price here. So the person who want to buy will now give the price they want to they will bid the price they want, and those who want to sell. So the bidder will give the highest amount is willing to pay for the security, whilst the seller is going to give the minimum amount he or she is, or the investor is willing to take for the security he or she want to sell. Okay, and after that they do the best matching. I don't know those who have bought car outside before. Sometimes you bid and the highest person who pays the highest amount get it. So they match it for you, and there's a level of transparency. The risk is less here because this is done at an organized stock exchange. Now let's come to the dealers market. Dealers market is where investors trade out of their own inventory. Okay, out of their own inventory. So if I have shares and I want to sell, okay, I want to sell, I'm going to do it directly to the person who want to acquire. It's not going to pass through any, the stock market is serving as an intermediary. Okay, even within that, they have stock brokers and all that. This thing that doesn't happen. I'm going to, if I want to sell, as I want to buy, we do it directly. Okay, it's normally done by the small firms. Okay, small firm, and it's normally done over the counter. Price is not that transparent. It's not, the transparency is not guaranteed, and risk is high. So one thing you should know, that there are some things that make learning easy. Okay, anything associated with an organized stock exchange is very transparent, it's very organized. So it will definitely, the risk won't be minimized, things will be fair, transparency will be ensured. Then anything that is actually with over the counter, we know they are small firms who are dealing between themselves, and some people can just cheat you, lie to you, and all that. So one thing you should know, that anytime you are talking of anything associated with over the counter is more risky than in an organized stock exchange. So auction market is done at the organized stock exchange. Sellers submit their acts, price determined by supply and demand, and it's very high transparent. Buyers submit their bid. Okay, this shouldn't be under this. This should have been continuous list of this. They're doing it like it's under, but it shouldn't be so. I think I didn't see it. So that is it. Then we have the dealer market. Dealer trade from their own inventory. Okay, from my own stocks. I will decide to sell directly to, but they quote the price. I'll quote the price and their ask price. Execution is done faster, and spread increase trade. So if I'm going to sell my shares or any security, I have to know that I'm getting higher price for from than the one I bought. So the bid and the ask price, the difference is what we call the spread. Okay, so that is it. So the quoted price, the ask price. So that is it. We have ordering type. Ordering type. Ordering is actually the instructions that is given by investor to stockbrokers, okay, to stockbrokers, determining how and when they should execute their order or their request, okay. So that is ordering, and that is ordering in trading. That is ordering in trading. Then we have the types. We have the market order, we have the limit order, we have the stop loss order, we have the day order, and we have the goods to cancel order. So let's go into it. When we talk of the market order, this is where the investor give instruction to the stockholder that you should execute this purchase or these sales immediately at the best available price. So normally, things you want to be executed now, execution is guaranteed, but then the price might not be that good for you, okay? But sometimes people need money, and they need the money now for emergency. They need the money now. So sometimes, and whenever you need your money now, you are likely not to get a good price, okay? So that's not guaranteed price. So you can get a lower price than what you are actually supposed to get. Then we have limit order. Limit order. Now this is where the investor give instruction stockholder that I want to buy or sell these shares at this price. So, for instance, if I am the investor, I'll probably tell him that, okay, I want to buy MTN shares. Okay, MTN share, I don't know the price. I think, I don't know the price, but let's say MTN share is like 5 CD. There's an example in my lecture note that says 5 CD. So I'll say if it's 5 CD, buy. If it increases to 8 CD, sell. Okay, that's the strategy I'm going to give to my stockbroker that yes, this is what I want. Okay, so this one to price is guaranteed that yes, I've told you that either when there is 5 or even better price than 5. If I say better price than 5, it means if it's lower than 5. Okay, if I'm buying the thing if I want to buy at most 5 and it's lower than 5, you can still purchase it for me because it's a good offer. I'm even going to make some profit on it. Okay. But then I also give that if it increases to the sell because I now get enough what returns. So that's the instruction I've given. So yes, the hello, hello, are you with me?
Um,
Are you sure you are with me? So where did we get to? And then network went off.
yeah, yes, we
Yes,
are with
we are
you.
with you.
So where did we get to? And
You
the
were
network went
explaining
off.
Limit
limit
order.
order.
Okay. So limit order, like I said, I'm giving instruction as a the investor will give instruction to the
Limit,
stockbroker that buy it at this price and sell it at this price. If you rate this price, sell it. If it get to this price, buy this particular share. So I've given instruction. So the price is guaranteed. Since I've given that instruction, the stockbroker cannot go and buy it at a different price that I've quoted. He can buy it at a better price. Like if I say sell at 8 CDs and it's 9 CDs, you know that it's profit I'm looking for, so you can sell it 9 CDs, but it shouldn't be less than 8 CDs. The same way if I say I want to buy it at 5, so the paid price I've given to you, if I want to buy it at 5 CDs, you can buy it at 5 CD or less. Okay, so but execution is not guaranteed because in the financial market, you can't guarantee how the price will fluctuate up to. So if it fluctuates up to then that's then fine. And I believe people who normally make this order are very smart people in the financial market. They are very knowledgeable. They are very good when it comes to the trend analysis and technical analysis and all that. So before they will come and tell you when they get to this buyer, when they get to that they have done all the analysis, their assessment before they will come and tell you. Okay, so that is the limit order for you. Then we have stop loss order. Stop. We have stop loss order. So this one, the person basically this person is the intention of the person is to minimize loss. Okay, minimize loss. So he will give you a price. He will also give you a price that with which you should sell or buy. Okay, so that is for um that is for that one. So you'll be like, oh, if this shares or this but I'm investing it drop to this price, okay, sell it immediately because I don't want the price to drop further. But when it drop further, I will lose. So imagine I bought shares for 5 CDs. Then I tell you that the moment you see that the share price has dropped to 6, it shouldn't be below. So the moment you get to 6, sell it. Mean I don't want to lose. At least I want to at least get 1 CD on per share. Okay, so that is it. Then we have the market structure. Okay, market structure. Market structure determine how the design of a financial market affect the pricing of shares. Okay, how is designed affect the price of the shares. So the bid and ask price, the liquidity level of the financial market, and its depth affect the price. But how price discovery, how price is determined, how price changes, how price is determined, how price is influenced by demand and supply. Okay, they also affect price. Then information asymmetry. So the information we have out there determine the shares we rush in to buy. Okay, and the ones we will not buy. So and at the end it affects the pricing of the shares. Okay, now let's go to Ghana Stock Exchange. Ghana Stock Exchange. Ghana Stock Exchange is the main security market or financial market in Ghana. Okay, and excuse me. Why? What? Okay, sorry. So that's the main financial market or stock exchange in Ghana. And the purpose is to mobilize long-term capital for firms, okay, link investors to companies, okay, encourage savings and investment. So these are some of the things they intend to do. Now we go to history of Ghana Stock Exchange. History of Ghana Stock Exchange. It was established in 1989. Then it began trading in 1990, November 1990. Then it was converted, and initially it started as a private firm. Okay, it started as a private firm. Then later they converted to public, and so it became Ghana Stock Exchange PLC. Okay, so that is the history of Ghana Stock Exchange. And like I said, the objective is provide what mobilize savings. As you are investing in shares, as you are investing in bonds, we are encouraging savings, promote corporate growth. Now, corporates are able to raise funds when they need funds to expand their business. They're able to raise funds from the market by borrowing or by giving ownership right to others. They also protect investors. You see, whenever I'm talking of organized stock exchange and I'm talking of over the counter, I always say that the organized stock exchange is less risky, it's more transparent, it's regulated. You can't go and do anything there. Like, it's not easy for you to go and mess up or steal people or dupe people on the Ghana Stock Exchange. But over the counter, I'm not discouraging over the counter though. But over the counter is more less risky. It's like you're dealing with the person directly. Okay. And we know we have crooks and all that in the system that if you are not smart enough, they can outsmart you. Isn't outsmart? I don't like using people. I don't think people who do people are smart. I don't think they are smart actually. And if you are smart, you definitely use your smartness to gain income legally. Okay, so it's because you are not smart enough to make money legally. That's why you probably want to dupe people. So people will just use some means to dupe you and all that, and that can organize it. So the objective is to protect investors. Me like this, I always tell people that me I'm risk averse. I'm risk averse. So if the platform is not that authentic, I will not go and trade there. So it will be very hard for me to go and trade on over the counter. It will be very hard. The firm really have to prove itself. Okay. But then some firms is over the counter, but they are registered by the Bank of Ghana and all that. And so somehow they are legit. And if you check their fundamentals, you can invest there. So that is it. So we go to functions of Ghana Stock Exchange. What they do is they list securities of firms that qualify, that meet their requirements. So they list them on the Ghana Stock Exchange. They price discovery, they determine price of shares through demand and supply. They enable people to trade on the platform, trade their shares and bonds and stuff and value. They provide liquidity, that's they give opportunity for people to convert their investment to cash whenever they are ready. Okay. Now, market participants. When it comes to Ghana Stock Exchange, and probably I think all stock exchange over the world have similar participants. Okay, we have the listed companies, the companies that you buy their shares, you get their bonds and all that. We have stock brokers. Okay, we have stock brokers. Those Stockbroker, they are licensed firms that are permitted by Ghana Stock Exchange Commission to serve as intermediaries between the investor and the shares of the firm. So that's then we have the investors, those who want to invest in the financial market in Ghana Stock Exchange. We have custodian. Custodians are after purchasing probably shares. These are the people that keep records. Mm. Sometimes they are employed because they register, so they register like they are employed by the firm to maybe keep records of their owners or shareholders. Eh? Custodian too are employed to keep records of those who invested in bonds and all that. Then we have Central Security Depository. Now they are in charge of holding this electronic securities. When you buy shares, you just get a letter from them that yes, confirming that you have bought stock. They don't give you anything, like direct anything. This Central Security Depository, they will create an account for you. So for you to be able to buy shares, invest in treasury bill, invest in corporate bond, you need to get Central Security Depository account. They will open account and keep your securities electronically. They will keep your electricity security. They will give you account number, and then you access. If you have bought treasury bill before, you know that before your money will enter your account you have the bank, it will enter your Central Security Depository before it will enter your account. The same when you are buying, the money enter, go electron to the center before they will buy. Okay, so that is it. Then we have want to know more about Central Security Depositories, CSD. They hold security electronically. They clear and settle trade, facilitate ownership transfer. So if I want to buy, another person who has an account in the Central Security Depository should be willing to sell. Then the person they will transfer it. They will do the transfer for us. Okay. And now, what are some of the things that are traded on Ghana Stock Exchange? And we know, of course, shares, equity is traded there. We know of debt securities like government bond, and so treasury bill is traded there, and treasury bond is traded there, corporate bond is traded there. Then exchange trade funds, EFTs, are also traded on the Ghana Stock Exchange. Now, we want to get the market segmentation. So yes, we have the main equity market. We have the main equity market. Then we also have the alternative market. Sorry. We have the Ghana Stock Exchange Alternative Market. This market are filled of the small firms, SMEs, and the firms that are not mature or that does not meet the requirement. They don't meet the requirement to qualify for the main equity market. This they have a platform where you can buy shares from these young firms. Then we have Ghana Fixed Income Market. We are talking of treasury bill, we are talking of treasury bond. So this is where it's traded. Now, this is what happens when you buy shares. When you trade when you buy your shares or security, the day you execute it, it takes 2 business days before whether the cash or ownership of the particular security will be transferred to you. Okay, so we call it T plus 2. T is the trading date, then plus 2 is the 2 business days that it has to take for you to actually get the ownership or your cash. Benefits of Ghana Stock Exchange: it gives us access to capital, right? It gives us investment opportunities. It also, as we are investing, as trade is going on, it's enhancing economic activities in the countries. Then challenges: there's low liquidity. Seriously, there is low liquidity. Even trade now is very low. People are not willing to even trade because it's as if nowadays there's a lot of education on the Ghana Stock Exchange. So people are not afraid anymore. Now people understand that yes, shares comes with a very high risk volatility. The when price is at first if price change, you see people want to sell and all that. But I think the education, well, there is less information asymmetry now. So people are not even ready. There are people who are complaining a lot to me that they are not getting, they will just place their order and it will be there and it will expire without them being able to execute it. Why? People understand the market and they are not willing to. But it also probably means that the firms in the market or the shares or the securities in the financial market is less for us. So there's limited participation. There's limited participation. Then macroeconomic instability will affect it. It will. If something is in a country, definitely the macroeconomic indicators will affect it. Okay. So these are some of the challenges they make. So if the indicators are not good, then it's going to affect it. Recent development, mutualization, that is, they converted it to public. Okay. They've also introduced the exchange, the EFTs, and they are doing digital trade modernization. Because me buying shares here, I'm not going to go anywhere. I'll just sit here and buy shares on my phone, place order and everything on my phone. Okay. So that is it. We are done for this one. Hello. Hello.
Hi.
Hi.
You, by sure you do have to say hello 2 times, 3 times before you respond. Any question?
Madam, because it's muted. If you are going to unmute it before you
Any question? No question. You are okay. Really? You are okay.
Yes.
Okay. Then